What's up, guys? Alvaro here, and welcome to the bilingual stock market channel again. Let's go ahead and talk about some stocks and about what happened today in the markets. And the markets did pretty well today, guys. This is the third consecutive trading session going up for the major indices. Russell 2000 went up today 1.12%, and Nasdaq went up 0.75%, Dow Jones went up 0.78%, and the S&P 500 went up 0.69%. And once again, guys, the big question, is this a bull trap? Is this rally that we have been seeing since last Friday a bull trap? I'm glad you asked. Let me show you some information that I have over here. So this is a bull-bear spread in panic territory. So as of January 22nd, this spread, guys, got the lowest it has been since 2013. Here you guys can see the correlation, right? So this spread got down to minus 23%, as I just said, on January 22nd, and we didn't see this level of fear of a bearish sentiment in the markets since 2013, guys. It's been almost 9 years since the market got this bearish. And let me show you another chart over here, because now the question is, what has happened from a historic standpoint once the markets turned this bearish? So check this out. And as I just showed you, let's say the very bearish level that we reached on January 22nd was minus 23.8%. So after the markets, on average, after the markets got this bearish, minus 23.8%, the return in the upcoming months and years is positive, guys. So check this out. 3 months out, up 3.6%. 6 months out, 6.7%. 1 year out, 11% up. 2 year out, 7.6%, or positive 7.6%, and 5 year out, positive 6.5%. So according to this data that I am showing you guys over here, the bottom is in. The bottom was 42.22, which was the lower pivot that the S&P 500 hit on Monday of last week. However, on the flip side, I have another interesting data for you. So whenever the S&P 500, from a historic standpoint, right? On average, let's say. So whenever the S&P 500 goes into a correction, remember that on Monday of last week, the S&P 500 got 12.50% of the highs. So the S&P 500 entered into correction territory for a matter of hours. So whenever the S&P 500 has dropped 10% or more, the average correction has been 19%. Or let me rephrase that. The average correction that the S&P 500 has seen has been at around 19%. So according to this other data that I am telling you guys about, the bottom isn't in. We are just seeing a relief rally inside a corrective phase of the markets, and more specifically, a corrective phase of the S&P 500. So let's see what happens, guys. The S&P, let me look it up over here. The S&P is, as of now, let me see, according to today's closing price, the S&P is 5.72% of the highs. If the S&P were to drop 19%, it would have to go down to 3,900 points. That would be a huge drop, right? So we have some bullish data, just like this bull bear spread in panic territory that I just showed you, and we have bearish data because the S&P usually, on average, when it enters into correction territory, it ends up seeing a 19% correction. So let's see what happens. We have very important earnings reports coming out today. We are going to go over Google's earnings report in just a second. Tomorrow we have Meta Platform or Facebook reporting earnings. On Thursday we have Amazon. And on Friday we have the jobs report. And as I told you in yesterday's video, the most convenient scenario for the bulls when it comes to the jobs report would be getting a weaker than expected jobs report for the month of January, because that is going to be a sign that the economy isn't getting overheated and so forth. And then next week we have on February 10th the CPI data report. So I don't think, guys, that we are going back up in a straight line either. I think that we are still going to be seeing volatility in the markets. I don't think that the S&P or the Nasdaq 100 are going to hit all-time high anytime soon. But I don't know, guys. If you ask me, my personal opinion, I think that the bottom is in. And as of now, the bottom is in until it's not. The bears have to take on 42.22. That is going to be a tough one. So let's see what happens, guys. I wanted to share with you a, let's say, bullish perspective of the situation that we are seeing as of now in the market, and also a bearish one. Now let's go ahead and take a look at the sectors of the markets, guys. And today the gold medal goes for the inflation trade, guys. Check this out. Energy up. The energy was the best performing sector today, going up 3.49%. Materials, another very important member of the inflation trade, goes up 1.59%. Industrial, another member of the inflation trade, goes up 1.43%. And financial, another member of the inflation trade, goes up 1.41%. So no doubt about it, the gold medal goes for the inflation trade. In today's trading session, the tech sector ended up going up 0.25%. Guys, until 3 p.m. Eastern Standard Time, the trading session unfolded, in a very narrow range. And once power hour started out, then the indices decided to go up in a very consistent way. So the tech sector managed to pull off a green day today, basically because of the rally that we saw into the closing bell. And the worst performing sector today was the most defensive sectors of the market, or the most defensive sector of the market. Sorry, guys, utilities, which went down today 1.36%. And you guys know that for the most part, when the markets go after utilities stocks, that implies that there is a lot of fear out there. And today it wasn't the case, because, we can make the case that the tech sector ended up being able to pull off a green day, and the most defensive sector of the markets went down 1.36% and actually was the worst performing sector today. And if we take a look at the advances and declines distribution, we can confirm that we had a very healthy rally today, guys. 5,000 stocks going up, and 2,500 stocks. Let's just round this up, or round this down would be rather, right? 2,518 stocks ended up going down today. A very solid rally today, once again, for third consecutive day. So let's see what happens tomorrow. I think that it is going to pretty much depend on whatever Google reports, or should be reporting as of now. And before going over the indices, guys, I want to show you the only trade that I took in today's trading session, and this was a home run, guys, with Tesla. So let me show you over here, Tesla. So let me show you, guys. This was a day trade that I took with a call option. So this morning I purchased the $905 call that expires on March 4th, and I paid $7,700. I was very convinced this was a risky trade, guys. Let's just put it that way. You guys know that I am, for the most part, an options trader, and I don't like buying call options that expire 1 month out, or, needless to say, weekly options. I am not a gambler. So for the most part, when I buy call options, I mainly buy calls in the money. That's a golden rule for me that I always respect. And I always pick expiration dates that are 3 or 4 months out. However, according to my TA, I was very convinced that if Tesla dropped this morning, it was very likely to find support at around $915. Tesla got a very nice haircut as soon as the trading session opened, from $950 down to $910. So, and as I just said, I picked up this call option, paying $7,700, and this was a 30-minute trade, guys, a very quick trade. I ended up selling out of this call option once Tesla hit $940, I think. So I was paid $8,220. So I ended up making over here $550 with a day trade that took me something like 30 or 35 minutes. So I took this trade and I was like, okay, I'm done for the day. Very nice trade, nice profit. And I don't want to risk the profit that I made out of this call option. So very solid trading session for me, no doubt about it. When it comes to the S&P 500, and before going over the earnings reports of Google, Starbucks, Advanced Micro Devices, and PayPal, let's go ahead and take a look at the S&P 500 and the Nasdaq 100. S&P 500 goes up today 0.69%, and it closed today's trading session at 4,546 points. And take a look at the 1 hour chart, guys. Take a look at what happened today. So today the bulls failed at 45.25 on 1, 2, 3, 4, and 5 occasions throughout the trading session. And exactly, guys, at 3 p.m. Eastern Standard Time, the S&P 500 took off and managed to close today's trading session at 4,550 points. So I am going to pull up here the 4 hour chart. And guys, I am going to repeat what I said in yesterday's video. The main gap that the bulls need to fill is up to 4,570 points, the 100-day moving average. If the bulls can take on this 100-day moving average, then they have another gap to fill up to 46.39, which is this 180 SMA on the 4 hour chart. So the RSI of the S&P is at 58 points. It is still healthy, guys, from a technical standpoint, no doubt about it. Keep in mind that we have seen the S&P 500 trading on good momentum with its relative strength index at 86 or 90 points. So yeah, we still have more room to the upside. I think that the direction that the S&P 500 is going to, let's say, peak throughout the remaining of this week is going to depend on whatever Google, Facebook, and Amazon report in the next hours. I mean, Google today, Facebook tomorrow, and Amazon on Thursday. But if those companies happen to report better, happen to post better than expected earnings, I think that the bulls are likely to fill this other gap. I think that the bulls are going to be able to take on this 100-day moving average and fill the next gap up to 46.35. I think that at around 4,650 points, 4,700, we are going to be likely to see some sort of retracement in the S&P 500 because, and as I said in the introduction of this video, I don't think that we are going back up in a straight line either. I don't think that is going to happen. I think that we are still going to be seeing a lot of volatility in the markets. If tomorrow we happen to see a drop in the case of the S&P 500, if that scenario were to happen, I am going to be looking at this 200-day moving average, this red line that you guys can see over here, as a possible area of lower support near 4,439 points. So let's see what happens, guys. I think that we are still going to be seeing volatility in the markets. But if Google, Facebook, and Amazon post good earnings, I think that the S&P 500 has room to the upside. Probably until 46, 37, 46.50, something in that ballpark. And when it comes to the Nasdaq 100, I think that the Nasdaq 100 failed right at the 200-day moving average. Yes, it did. So the NDX went up today 0.60% and it closed today's trading session at 15,019 points. And take a look at how the bulls managed, guys, to take on this 50 SMA on the 4-hour chart, but they failed right at this 200-day moving average at 15,027 points. So needless to say, the most important area of overhead resistance for tomorrow's trading session is going to be this 200-day moving average, as I just said. If the bulls can take on this moving average, then they have another important gap to fill up to 15,200 points, which happens to be a former area of support back from early January and also a former area of resistance back from early August. If, on the flip side, tomorrow we happen to see a drop in the NDX, if Google happens to post bad earnings and PayPal and so forth, because both are members of the NDX, then I am going to be looking at 14,650 points as a possible area of support. 14,650 points happens to be a former area of support back from early October. The RSI of the NDX is at 59 points. Yes, guys, we still have room to the upside. And as I just said in the case of the S&P 500, I don't think that the NDX, the Nasdaq 100, is going to see all-time high right away, that we are going back up in a straight line. We are going to find an important resistance at some point, maybe at this 200-day moving average, and we are going to see choppiness. We're also going to be seeing volatility, no doubt about it. And now, or according to my opinion, I could be mistaken. I have been mistaken before. Let's go ahead and take a look at Alphabet, guys. You know that I have not prepared anything here, so I am going to be improvising when it comes to Google. You guys know that I am a perma bull, so I am crossing my fingers and I hope for the best when it comes to the earnings report of Google. So what is going on here? There you go, guys. We'll still have more room to the upside. Google is killing it after hours. So during regular trading hours, Google goes up today 1.73% and it closed today's trading session at $2,752. And let me pull up here the 1 day, 1 minute, and Google is killing it, guys. Fucking killing it after hours. This is bad news for the bears, no doubt about it. So Google is up after hours 7%. Jeez. So I guess that they beat bottom and top line, and on top of that, they are posting a very solid guidance. So what is going on over here with good old Google? Let's see. Okay, come on, Thinkorswim, show me the information right away, please. Let's see. EPS revenue, where is the information at? Okay, Alphabet posts Q4 EPS of $30.69 on revenue of $75.3 billion. Okay, analyst consensus. Wow, when it comes to EPS, what a beat, guys. So, as I just said, EPS came in at $30.69 versus the estimate of $27.28. So a huge beat when it comes to EPS and revenue. This was a huge beat, guys, as well. Revenue came in at $75.3 billion, beating the estimate of $71.8 billion. Jeez. And let's see. Okay, Q4 Google advertising revenue came in at $61.2 billion versus analyst consensus of $58.6 billion. A huge beat when it comes to advertising revenue as well. Do I have anything guidance related over here? Let's see. Q1, Google sees Q1. No, I don't have anything guidance related, but this was a huge beat across the board, guys, and that's the reason why Google is up 7% after hours. So with Google posting this earnings report, such a positive earnings report, guys, we might still see another green day tomorrow. So wow, amazing, guys. I noticed when I was filming my video in Spanish, I didn't see this news when I was filming my video in English. So Alphabet shares are trading higher. I just saw this news when I was filming my video in Spanish. Alphabet shares are trading higher after the company reported better than expected Q4 EPS and sales results, data. The company also announced the board of directors has approved a 20-for-1 stock split. This is, what can I say, guys? This is extremely good news for Google. So let's go ahead and do the math as of now. How is this going to be looking like? So after hours, Google is trading at $3,000. Let's just put it that way, right? And they are carrying out, or they will carry out, a 20-for-1 split. So let's divide 3,000. All right, over here. This implies, guys, that Google, whenever, because we don't have a specific date yet, right? That whenever this stock split is carried out, if that day Google is trading at $3,000, so one stock of Google is going to cost $150. So this is, this is huge news, no doubt about it. You guys know that as of now, we have a lot of people that are able on Robinhood and other brokers to trade fractional shares, but a bunch of people out there don't have that possibility of buying fractional shares. So Google is going to turn from a $3,000 stock, which is a high price, no doubt about it, for many people, into a $150 stock. So I don't know what can happen tomorrow. Let me do this over, guys, over here. So because in the analysis that I first filmed of Google, I was telling you guys that Google is as of now very overextended because the RSI is very high and stuff like that. Forget about that, guys. I think that Google tomorrow is going to burst above all-time high, no problem, $3,019. And once it takes on $3,019, we are going to be at pretty much no man's land. So how high can Google go, guys? What are we looking at? $3,100, $3,200, who knows? So watch out for Google, guys. This is going to be a total runner tomorrow. And I think that Google should burst above $3,019. And I don't know, we don't have any previous technical reference, guys. How high can Google go? 3,100, 3,200, 3,200, who knows, guys? So that's it. So unbelievable. So now we are going to take a look at the earnings report of Starbucks. And now let's go ahead and take a look at the earnings report of Starbucks. And mind you, guys, I have skin in the game because I own call options of Starbucks. I wasn't playing earnings over here. Starbucks obviously missed on earnings, but I purchased call options that expire in April or May. So that was those were calls that I purchased like 2 or 3 weeks ago. So I still have time over here. So Starbucks went up today during regular trading hours 0.45%, and it closed today's trading session at $98.76. So let me pull up here the 1 day, 1 minute chart. And it isn't down that much, right? I mean, it is down 5%. Yeah, it is a good chunk after hours. So what happened with Starbucks? Why did they drop the ball? Let's see if I have the information handy over here. Okay, so EPS came in at 72 cents, missing the estimate of 70 cents. So they missed by a long shot when it comes to EPS. And sales came in at $8.10 billion, beating the estimate of $7.97 billion. So they beat on sales, but they missed on EPS. And do we have any guidance related information? Let's see. Okay, active Starbucks rewards membership in the US up 21% year over year to 26.4 million rewards active Starbucks rewards membership members. Let's see, global comparable sales stores. Okay, Q1 global comparable store sales increased 13%, driven by a 10% increase in comparable transactions and a 3% increase in average ticket. So, yeah, that's good news as well. Let's see. Starbucks opened 484 net new stores in Q1, yielding 4% year over year, ending the period with record 34,317 stores globally. That's a lot. Wow, what an amazing company, guys. 34,317 stores globally. But I don't see. Okay, but let's see. Okay, here we have 13% okay. Disruption in prior year due to COVID-19. Strength of new U.S. cooperated stores. So, yeah, they are pretty much stating that they had issues because of disruptions caused by COVID-19. So maybe that's a reason why they couldn't beat on EPS. And Starbucks earnings come up short. CEO blames inflation and labor concerns. So that's a reason why. I mean, they missed on EPS, guys, but on top of that, the CEO is saying that inflation and labor concerns are a problem. So the stock of this company is down after hours. So where could Starbucks find support at? We don't have, on the 4-hour chart, we don't have any previous area of support that we can call out over here. So Starbucks is trading at $94. Let's see, guys. Yeah, here we have a previous area of resistance. Let me draw a line over here. So the next important area of support for Starbucks is going to be at $91.50. We are talking about a former area of resistance back from mid-October of 2020, almost a year and a half ago. That would be the next important area of support. And on top of that, we can see over here this 180 SMA on the 3-year chart that should back up this previous area of resistance. So $90.70, guys. I think that might be a worst case scenario for Starbucks in tomorrow's trading session. And now let's go ahead and take a look at AMD Advanced Micro Devices. In the case of the calls that I own of Starbucks, I still have time. Those calls expire, I think, in April or May. So I'm going to wait. I don't think that this was a bad report. The company is being able to grow its business model, and on top of that, they missed on EPS, but they beat on sales. And obviously, disruptions in supply chains and labor shortages are affecting in a negative way the business model of Starbucks. Okay, AMD Advanced Micro Devices. Let me pull up here the 4-hour chart. What is going on over here? Take a look at this. Pump it up, guys. AMD is up a lot after hours. So Advanced Micro Devices went up today 2.21% during regular trading hours, and it closed today's trading session at $116.78. So let me pull up here the 1-day, 1-minute chart. And wow, yeah, guys, I mean, AMD is up a good chunk, 10% after hours. So this company killed it. So far, guys, and this is crystal clear, most of the tech stocks are killing it. So that's why these stocks trade at higher multiples, because they are growing fast and they are able to navigate turbulent waters and make money regardless of the general condition of the economy. Take a look at Microsoft, take a look at Tesla, take a look at AMD. I haven't taken a look at the earnings of AMD yet, but take a look at Google, take a look at Apple. So yeah, technology, guys. That's why we pay a premium for for the stocks of these companies, right? Okay, Advanced Micro Devices. Let's see what is going on over here. Do I have revenue? Plus, minus. I have something guidance related here. I'm thinking. Yeah, I have guidance over here. Let me see if I can see the report itself. What is EPS? Revenue. Okay, so EPS came in at 92 cents, beating the estimate of 76 cents. And sales came in at $4.83 billion, beating the estimate of $4.52 billion. So this was a beat across the board. They beat on EPS by a good chunk. and they beat by a bit when it comes to sales. Let's see what is going on with guidance. So, okay, let's see Q1. Okay. So, AMD sees Q1 sales between $4.9 billion versus, from $4.9 billion up to $5.1 billion versus $4.32 billion estimate. So they are up guiding here. They are really showing a very solid guidance when it comes to sales. Do I have any other guidance related information over here? No, I don't have anything else. AMD sees full year 22 sales at $21.5 billion versus $19.27 billion estimate. Jeez, guys, what an unbelievable guidance. They are really up guiding, guys. $19.27 billion estimate, and AMD says, no. I am going to be at, or my sales are going to be near $21.5 billion. A very impressive earnings report for AMD. So the stock of this company is going to be a runner tomorrow, guys. Make no mistakes. Take a look at how this 100-day moving average is acting as of now as a resistance. So if the bulls of AMD take into account that AMD is trading after hours at $128, if they can take on this 100-day moving average near $129, I am absolutely sure, after having taken a look at this earnings report, that AMD is going to be able to fill the next gap up to $139. $139 happens to be a previous area of support back from mid-November. So if we were able to take a momentum trade with AMD from, let's say, $129, $130 up to $139, we are looking at a 7% profit trade. And if we take a look at the RSI, guys, AMD just made a push to the upside of almost 10%, right? As I just told you. And take a look at the RSI. It is at 71 points. It is a bit elevated, but AMD still has room to the upside. Take a look at the RSI chart down here. So we have seen before AMD trading on good volume and momentum with its RSI being at 89 or 90 points. So 71 points when it comes to the RSI of AMD, this is nothing. I think that we're very likely to see AMD filling this next gap up to $139 in tomorrow's trading session. And the last stock of this video is going to be PayPal. And what is going on in the case? Ooh, guys, this thing collapsed. Take a look at PayPal. Oh boy. So these guys dropped the ball. So PayPal went up today 2.24% and it closed today's trading session at $179.80. And PayPal collapsed, guys, completely. So as of now, we are seeing a drop in the case of PayPal of 17%. Jesus Christ. So what happened over here with PayPal, guys? So this is the very first tech stock that actually drops the ball. So let's see what happens. So let me see if I have the information handy over here. Let me see. What is EPS? PayPal sees fiscal year Q4 adjusted. I don't have the competitive, guys. Let me see. Okay. So EPS came in at $1.11, missing the estimate of $1.12. That was a small miss when it comes to EPS, and sales came in at $6.90 billion, beating the estimate of $6.86 billion. So this huge drop, guys, of almost 20% has to be guidance related. So what happened here? Let's see. Q4, do I have anything guidance related? Okay, PayPal sees full year 2022 sales excluding eBay up 19 or from 19 up to 21% year over year. I don't have any competitive over there. So, okay, I have the estimate when it comes to EPS for full year 2022, but I don't have the competitive. So let's see. I only have the information about revenue and EPS, guys. Okay. Q4 total payment volume came in at $339.5 billion versus analyst consensus of $344.5 billion. So they missed when it comes to total payment volume as well. So this was an okay earnings report, guys. Nothing crazy. They missed on EPS by 1 cent. They beat on sales, and I don't have anything else when it comes to guidance, guys. And they missed by a good chunk when it comes to total payment volume, no doubt about it. PayPal adds 9.8 million net new active accounts in Q4. I don't have any competitive over there. And here, Thinkorswim says that PayPal plummets after Q4 earnings. EPS guidance for Q1 and full year 2022 coming below Street View. So this is it, guys. PayPal, as I just said, posted a decent earnings report, but the markets are being are being very demanding when it comes to PayPal. So as of now, guys, with the drop that we are seeing today, PayPal is trading, let me see, 55% of the highs. Jeez. So, and mind you, guys, if we take a look at the RSI of PayPal, it is not really oversold. You guys can see the RSI at 30 points on the 4-hour chart. So PayPal clearly still has room to the downside. And mind you, this is the stock of a company that has a high institutional participation. So, you guys know that institution don't sell off of a big position once and for all on one single day. So we might see PayPal going lower for maybe 2 or 3 consecutive trading sessions. If so, guys, what would be the worst case scenario for the stock of this company? I would say $126. $126 happens to be a previous area of resistance back from February of 2020 and also back from June of 2019. So we can make the case that since PayPal is trading after hours at $148, if the stock of this company keeps on dropping, and if it happens to pay a visit down to $126, then the RSI of PayPal is going to be way lower, and that is going to increase the likelihood for the bulls of PayPal to find support at a previous area of resistance and then bounce back up. But this doesn't look any good for PayPal, guys. Unfortunately, the stock of this company has gotten absolutely killed. And yeah, that's it, guys. Bad news when it comes to PayPal. And with PayPal, I am going to wrap up this video. Thank you very much for your attention, and thank you very much for hanging out with me once again. Remember, and keep in mind, guys, that here on the Bilingual Stock Market channel, we are posting stock market update videos Mondays, Tuesdays, and Thursdays as well. So if you want to get all of the notifications of all of our videos in a timely manner, you have to be subscribed to this YouTube channel, but you also need to activate the notification bell right up there. Follow us on Instagram as well, guys, at Bilingual Stock Market. And remember that this is the Bilingual Stock Market channel, the YouTube channel, in which we talk about the markets, but we do it differently because we talk about the markets over here in 2 different languages, in English and Spanish. So you can pick your preferred language, but most importantly, this is the YouTube channel in which we know that the wonderful world of Wall Street is not for geniuses, it is for entrepreneurs, just like you guys and myself. My name is Alvaro, and I will see you guys on Thursday, once again, next Thursday, 3 or 4 hours after the market closes. Peace out.